Welcome back. Now joining us is Lwazi Matakane from Nedbank Private Wealth for a look at what's played out on the market scene. Lwazi, thank you so much for your time today. Now, all that glitters seems to be gold, and there seems to be no stopping this, this rally in the yellow metal. What are you making of it all? Really working out in our favor, a weaker dollar also working out in our favor.
Yeah, no, thanks, Noling, and good afternoon to your viewers. Look, with respect to gold, we know it's a safe haven story. We know if you look at what's happening within US Treasuries and the steepening of the US yield curve, assuming that these interest rate cuts come into play, and the market's assuming two of them. So you've got the short end of the yield curve, going lower, but the inflation expectations on the longer end of the yield curve, steepening that curve. So people are using gold as an inflation hedge, one, and obviously geopolitics is one of the big issues on the cards right now, with the president still being, his abrasive self with respect to diplomacy around other countries and countries he doesn't like. And we know there's a couple of events that are going to take place in the US throughout the year. Again, looking at the Fed chair removal in May, or the changes, what that will look like, who the next person coming in will be, and also midterm elections in this year as well for the US. So there's a lot of things going into play, but safe haven status is looking well for gold. And obviously, the metal itself will shine when safe haven demand is in play.
As you mentioned, there are lots in play, and lots in play today. You touched on US Treasuries pricing in 2 rate cuts. We do have the first Fed rates announcement later this evening. Let's talk about your expectations there. Of course, consensus is for a hold, but I guess everyone's just, eyeing what the Fed chair, Jerome Powell, will say at his briefing and what that could mean for monetary policy moving forward.
Yeah, so the big thing is obviously the forward outlook of monetary policy. We know the Fed chair's term is going to come to an end. It's a very politicized space at the moment, and everyone is looking at how his disposition will be giving that statement. However, if we're to look at macro data of the US, you still have unemployment high for the US number, even though it came lower at about 4.1%. The last data point that came out, you still have inflation higher than the target rate of 2%. I think it's about 8 bips higher for the previous month of December. So you've got a couple of concerns of a labor market that is weakening but stabilizing, but you're also looking at inflation, which is not really reaching target. So the Fed has to balance the act between, supporting employment numbers. The expectation largely for the market and for ourselves is for the Fed to just keep rates on hold, and possibly in the second half of the year start looking at rate cuts.
Let's take a look at the chip makers, or the AI space in particular, starting off with numbers from ASML, topping expectations, really betting on that AI boom story. We also saw the same kind of reaction in markets when TSMC was out with results last week. Lwazi, does this pour cold water on those AI bubble concerns, or should we just play a wait-and-see game to see what we get out from the likes of a Meta, the likes of a Microsoft?
Yeah, so there's a couple of things that are taking shape in that market. So if you're looking at digital infrastructure as a whole, you're starting to see a much greater rotation into digital infrastructure securities or companies. So the data storage companies like Seagate Technologies and the like. You're looking at ASML as well, which is a company that does the lithography on these AI chips, where it indents them for the end users. So that AI story is still largely in play, but if you look at the individual companies themselves, they look full on valuation, on a valuation basis.
Yeah.
So look, it's anyone's game right now. The trend is your friend. You don't want to burn yourself going against momentum, but largely they're overvalued. But there is a trend moving towards general AI infrastructure plays, rather than just looking topically at the AI tech stocks in general.
Would you then say maybe looking at some of the AI tech players, or rather maybe the AI stocks that would benefit in terms of maybe the secondary market that is likely to benefit from this AI story we are currently seeing? There's been a lot of focus around the memory chip makers. There's also been focus on the energy players on the back of, this infrastructure spend on data centers that we're seeing.
Yeah, so these data centers, they really need a lot of energy for cooling purposes. So green technology and green energy providers are also looking like a thematic play at the moment. So we are seeing some demand into those. Largely, you're going to see a lot of demand into these data centers because these AI models require that much storage and capability to actually, work out the what you call it, the calculations and execute on their mandate. So there's a big requirement for data storage and data centers.
Yeah.
There's a big requirement for energy concerning these data centers. So you're going to look at green technology as one big play thematically. You're going to look at data centers as a hosting of, data storage as a result of that demand for AI and cognitive and also just generative AI competence around this AI story.
All right, let's get your stock pick. Where are you seeing value at the moment?
Look, I'm still staying local. I do find South Africa to still be trading at a discount to peers. We are at a discount to developed markets. And within that, just taking a look at the business cycle with interest rates trending lower in South Africa. We've had a couple of cuts ourselves. We are penciling in another 2 cuts from the SARB. I'm looking at a stock like Bidvest, which is an industrial stock. If you look at the 2-year peak of Bidvest, it was around 304 Rand. It's currently trading at around 230 odd. I mean, that's trading at 11 times PE, which is below its long-term average multiple of about 15 times. And if you look at the business itself, the business is actually a great business. If you look at the business cycle where we are at, some of the things that are doing well, some of the business sectors units that are doing well within that is the services business, the branded products unit that's been actually quite resilient. And if you look at automotives, that will also be a good play for the discretionary spending or consumer discretionary aspect of the economy within the business cycle. So we kind of like that. We're looking at management. Management will mostly focus on creating organic growth and de-gearing the balance sheet. So far, they've done a bit of M&A in the recent past, but with the stronger currency and the, call it, lower interest rate cycle, that will help also de-gearing, particularly on the foreign debt front. So we're looking at this to re-rate a little bit higher on better performance. Their cash conversions are great, and it should, in the long run, justify re-rating higher as a stock.
All right, Bidvest on your radar. Lwazi, thank you so much for your time and taking us through trade this evening. Now that was Lwazi Matakane from Nedbank Private Wealth.